Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, March 3rd, 2010. We begin today's broadcast with a look at the euro-dollar pair, which in yesterday's session we saw rejected a move down below 1.3450 and rallied during the remainder of the session. Overnight, we tested resistance at 1.3650 and a bit of consolidation, but in New York trading, we popped above the 1.37 level for the first time in 10 sessions. That broke us above the resistance we had been seeing in this sideways consolidation pattern throughout the last 2 weeks, with resistance here at 136.50, or if we used our absolute highs for the range, then it would be here. So the main news was that markets embraced the latest austerity measures from authorities in fiscally troubled Greece. Greek authorities announced a range of measures embracing spending cuts and an increase in taxes, including a rise in sales tax, a cut in salary bonuses, and a freeze of state pensions, which are all together expected to raise about 4.8 billion euros to bring down the budget. The move shows that Greece is taking seriously the suggestions from the EU, and it also helps the EU in case it needs to give financial assistance to Greece, as it shows that Greece is taking the hard steps necessary in order to cut its deteriorating fiscal position. It does seem, however, that reports that when the Prime Minister of Greece and the Chancellor of Germany meet on Friday, they won't be announcing any aid package for Greece. Still, we saw Greek bonds rise to the highest level in 3 weeks following the announcement of the Greek measures, and it seems that the bout of euro selling has paused for now, and with US equities rising, we have a bit of risk appetite in the currency markets, as we will see with our other currency pairs. And currently we are running up against a downward sloping line of resistance if we connect our highs from February. So right now we are seeing a bit of resistance following our move above 1.37. Switching to one of our best performers this week, the US dollar, Canadian dollar, well, in favor of the Canadian dollar, I mean. We extended our losses for the pair in today's trading, following the more hawkish Bank of Canada statement yesterday, as well as better than expected GDP release in Monday's session. As we can see, we broke below this head and shoulders pattern, breaking the neckline around 1.05 until we hit new support at 1.04 in yesterday's session, but we plowed through that, and we have set a new 6-week low for the pair around 1.0270. The Canadian dollar is riding today's risk appetite as we saw North American equities jumping higher, plus oil prices were up above the $81 a barrel level, and we know that the Canadian dollar is very strongly correlated with oil prices. The increase in risk appetite in currency markets has had a negative effect on the greenback, which has been sliding against most of its rivals. For example, if we look at the pound-dollar pair, we had a very sharp drop in Monday's session. Then we paired some of those gains and consolidated, with the 1.05 level acting as near the 50% retracement level. So that had been our resistance in yesterday's trading. But today we moved above that 50% and the 1.50 price level. And by 12 p.m. in New York trading, we had moved even above 1.51 and looking to test perhaps the 1.5150 region. That took us above the 50 period moving average in the hourly, using hourly candles. So we'll see if this is perhaps a bit of a swing back in favor of the pound, as we did have some positive fundamental data, but this sharp drop on Monday is still a very serious concern, and we'll see if perhaps we're going to test this level of support now as resistance. But with, like I said, risk appetite in the markets, the pound is gaining against the greenback. In a look at the fundamental data from the UK, we saw better than expected services PMI for the month of February, as the index came in at 58.4, which was about a 4-point jump from January's figure. That shows that the expansion in the services sector is increasing at a faster pace in the middle of the first quarter. Also, we had a much better than expected consumer confidence reading from Nationwide for the month of February, as it posted 80 compared to the 74 we saw in January. So a bit of an increase in consumers' moods plus a stronger expansion in services has the pound rallying in today's trading. In news from the US, we had the ADP employment change for the month of February, which showed 20,000 private sector jobs lost during the month. That was a slightly weaker reading than expected, and we also saw a rather heavy downward revision to January's data. Taking a look at the internals, we saw that the services sector has gained jobs yet again by 17,000, though the goods producing sector was off by 37,000. A second release from the US was the ISM non-manufacturing PMI, which is a measure of the services sector in the US, and it showed a better than expected reading, climbing to 53.0 from January's 50.5. Business activity and new orders were both higher, and employment, while still in contractionary territory as it was below 50, rose to 48.6, which means that the pace of layoffs has slowed. Now this runs counter to what we saw in the ADP employment figures, which actually showed employment increasing in the services sector. The pace of expansion was a 2-year high, and we had been stuck in a pretty narrow range the last 5 months or so between 49 and 51, and we finally managed to break above that level in February. As anyone who's been watching our videos knows, it's been the manufacturing sector that has been the spearhead of the U.S. economic recovery, but it's nice to see that the services sector picked up its activity in the first quarter of 2010. Now again, the release helped to boost U.S. equities, so it was actually it wound up being dollar negative during today's trading. Perhaps it's the general greenback weakness we saw in our other pairs, but it's interesting to note that the dollar-yen pair fell below the 88.60 support level in New York trading despite higher equities, which usually risk appetite means that this pair goes in favor of the greenback. So perhaps just some overall greenback selling, and that is causing a weakness even in the dollar-yen pair. Our higher yielders, like the Australian dollar, rallied in New York trading, and it pushed above the 0.9070 area, which had been setting up as resistance in yesterday's session, and was also we peaked above our high from February 23rd, which was at the 0.9070 area. We saw the Reserve Bank of Australia raise rates in yesterday's session, and that helped the Australian dollar to rally to this resistance level. And if we take a look at gold prices, we see that they have broken above resistance as well. Here's a look at gold versus the dollar, and we see that we had had some strong resistance around the 1,130 level. And overnight we moved above that, and in yesterday's New York trading we had moved above that level, and now we're pushing further to 1,145. So that helps the Australian dollar, as it's a very big exporter of gold. So it's a day of risk appetite, as markets have taken the Greek austerity measures rather well. Plus we had some better than expected data from the UK, and the services sector in the US also helped to fuel equity gains, which has helped higher yielders and our commodity linked currencies like the Canadian dollar and Australian dollar. So we'll see if this holds up during the rest of the week, and let's see what fundamental data we have to look for in the coming session. Tonight, Australia has 2 relatively important releases, including its capital spending for the fourth quarter, as well as its trade balance. Overnight, Eurozone posts its final version of fourth quarter GDP, and in early tomorrow morning at 7 a.m. we have the UK Bank of England deciding on interest rates, which will be followed by 7:45 by the European Central Bank's interest rate decision. At 8:30 a.m. tomorrow morning, ECB President Trichet will hold his press conference following the ECB decision, where he will take questions from the press. Also, around that time, we will be getting jobless claims data from the U.S., as well as the final version of labor productivity and labor costs for the fourth quarter, and Canadian building permits. At 10 a.m., the U.S. releases pending home sales data, and Canada releases its IMV PMI, overall measure of economic activity in the country. And that will wrap it up for today's broadcast. For more news, videos, and analysis, please visit our site, FXTimes.com. I want to thank you for watching today and wish you good trading.